Hello again traders, doing Shabba there from Drfx, Swing Trading Mentoring. Going to be taking a look at a few currency pairs that I think could provide us with trading setups within the next 12 to 24 hours based on the signals and patterns that have been provided by their respective daily and 4-hour charts. Now the first one that I'm going to take a look at is the Euro US dollar, which is actually going to be an example of the first type of trade setup that I trade based on the theories from my trading manual. Now this is where we trade the early set of bearish and bullish waves that lead to the formation of consolidation, instead of having to wait until the consolidation has been completed and then trading between resistance and support. So what we do is to spot the early set of bullish and bearish waves that indicate that the market is going to be forming a consolidation, and then trade these waves until the consolidation has been completed. So in addition to trading between resistance and support, when these boundaries have been clearly formed, we can get an early set of trading gains once we're able to spot these early waves that indicate that the market is going to be forming consolidation. So this was the situation on the Euro US dollar just a few days ago, where the market had provided us with this bearish wave followed by this bullish wave, and it had started to move sideways, indicating that it was very likely or very possible that we would see the market provide us with that bearish signal to indicate the formation of another bearish wave as part of the continuation of the formation of this consolidation setup. So this was a projection, and as you can see here, the market has in fact provided us with this bearish signal that has created what we call an evening star formation that is likely to provide us with another bearish wave as part of the formation of this consolidation setup. Now in this projection that I'd made a couple of days ago, I had made the projection that the market was going to be forming an angular support boundary like this. But based on what we'll see on a 4-hour chart, the more likely scenario is that we'll see the market come all the way down to the support point, where it will form a second support point before rallying and continuing the formation of the consolidation setup. So the expectation is that the market is going to be forming a horizontal support boundary instead of an angled one, based on what we will see on the 4-hour chart in just a minute. So the signal given here is what we call an evening star, and this is expected to lead to a movement that takes us down towards this area here over the next couple of days, which should provide us with a trading opportunity of between 50 and 70 pips, or depending on where the signal is given, we can perhaps aim for a target of up to 100 pips. Now this is the situation on the 4-hour chart. Now the reason why I think that the market should have enough momentum to take us all the way down to the support point is the fact that we're breaking out of a consolidation setup on the 4-hour chart. This is an example of a setup that normally leads to fast and aggressive movements, and usually when we have this sort of setup on a 4-hour chart, it usually indicates that the market will have enough momentum to take us to the other side of the boundary, all the way down to the support point in this case. If it was a rally, then the reverse would also be true, where the market would have enough momentum to take us all the way up to the resistance point. So this is the situation on the 4-hour chart. Breakout from this consolidation setup led to the formation of the daily candlestick signal in sync with the dynamic relationship between the daily chart and the 4-hour chart as outlined in the trading manual. So what we have here is the break of the consolidation as well as a break of this uptrend line, definitely telling us that the market is in the sell zone and that we should start to look for a trading opportunity to take advantage of this downtrend. So what I think could take place is that the market is going to pull back a little bit and then U-turn and provide us with a strong bearish signal to provide us with an entry setup to take advantage of the expected movement bearish. So this is the overall setup. Market forming a consolidation setup and has now provided us with an evening star signal indicating the start of the movement or the continuation of the bearish movement all the way down to this area here. And what I think we should look out for to take advantage of it is a strong signal followed by a pullback, a brief pullback, and then a strong bearish signal to provide us with a strong entry setup where we can capture up to 100 pips as part of the movement that takes us all the way down to this area here. Now we're going to be taking another look at another currency pair which also looks as if it's forming a consolidation setup, where we're going to be taking advantage of the early waves that are leading to the formation of this consolidation. This is actually taking place on the Euro Canadian dollar, which I think has two interpretations of how the market could be forming a consolidation setup. Now on the daily chart here, one of the possibilities is that this could be the resistance boundary that is being formed and the support boundary being formed at an angle like this. And so this signal that was given yesterday is going to be indicating the start of the movement down towards this area here as it forms this second resistance point. However, the second interpretation, which I think is the more accurate one, is that the market is going to be forming a range consolidation setup, with these 2 points here being the 2 support points that have led to the formation of the support boundary here, and the resistance boundary is going to be formed with this first resistance point that has been formed and the second one that is now being formed with this bearish engulfing candlestick formation. So this is what you will see from time to time with the currency market, where some of the patterns can be interpreted in different ways, and what it comes down to is basically having an eye for the type of waves and the types of trends that are more in sync with each other, so that we can have a more accurate interpretation of what is taking place. So in other words, these waves here, this bullish movement, this bearish movement, followed by this bullish movement, these waves here seem to be more in sync with each other and of a similar size compared to this movement that took place here. So that is why I think these are going to be forming a consolidation setup on their own by themselves without this section here. So this section, as you can see, is pretty large, much larger than these waves. So that is why I think that this is a more accurate interpretation of the consolidation setup compared to this setup. So with that being said, this bearish engulfing candlestick formation is expected to take us all the way down to this area here, where the support boundary has already been formed. And so what we're going to be doing is looking for a trading opportunity on the 4-hour chart to take advantage of this movement. Again, similar to the Euro US dollar, we expect that the market is going to slow down a bit following this sharp breakout that led to the break of this uptrend line, and it should pull back a little bit before U-turning and providing us with a strong bearish signal. Once that signal is strong enough, then we would place our stop loss at the high of the U-turn that would have created a small resistance point, and then we would enter the close of the bear candle and then target a trading gain as the market heads towards the support boundary. Now, another thing that you may have noticed is that as part of this projected movement and setup, what has been formed here, or what is likely to be formed here, is what we call a head and shoulders pattern or bear crown setup. From the trading manual, you will see an example here where it is a typical type of market pattern that leads to the formation of, that leads to a trend change, where the market would form a last setup as part of the previous trend, followed by a U-turn that ends the trend and leads to the break of trend lines that would have been formed along the way. And then as part of the formation of the new trend, it will form a setup at this area here that would lead to the creation of what we call the right tip or the right shoulder. And then once that setup is formed and then broken, it will lead to the continuation of the movement in the new trend direction. So bear crown, bull crowns, head and shoulders pattern are one of the patterns that are very popular that usually indicates the start of a new trend direction. So here you see that this section here would be referred to as the left tip of the setup or the left shoulder. The sharp U-turn that has led to the break of this uptrend line would be the center tip. And the projected right tip would be formed when the market pulls back a little bit and then U-turn to provide us with a bearish engulfing candlestick formation. Or perhaps it could move sideways and form a small consolidation setup. Regardless, once the setup is strong and clear, it would essentially be creating the right tip of the formation and be providing us with an entry setup as part of this continuation of this movement bearish. So this is what we're going to be looking out for. We're going to be looking out for the market to pull back a little bit and then provide us with a strong entry setup to take advantage of this movement all the way down to the support boundary. Now, I'm going to be taking another look at another currency pair, the pound Canadian dollar. This is actually going to be an example of false consolidation breakout reversals. Essentially what takes place with these types of setups is that the market will attempt a breakout at one end of the consolidation and that signal is going to fail. That signal fails and it's followed by a sharp U-turn that takes out that candle and takes us back inside of the consolidation, and in many cases leads to the breakout at the other end of the consolidation. So here you can see from the trading manual again a few examples of the types of signals that usually lead to false breakout reversals that take us back inside of the consolidation. So you can either have a simple U-turn, a simple candlestick formation, or a more elaborate set of signals such as double bottoms, double tops, ABC signals, as well as small consolidation setups that are formed just outside of the large consolidation setup. Now in this case on the pound Canadian dollar, this, as you can see here on a daily chart, the market formed a fairly small consolidation setup, what I call a normal consolidation setup in the trading manual. And as you can see here, the market attempted a weak breakout attempt above resistance, which was now taken up by the bearish signal here that has closed comfortably below the resistance and is telling us that the market is like to head back toward the support boundary and potentially provide us with a trading opportunity. So failed breakout setup, failed breakout signal here, market back inside of the consolidation, and this is like to take us all the way down to the support boundary once again. Now again, similar to the Euro Canadian dollar and the Euro US dollar, gonna be waiting until the market pulls back a little bit and then U-turn to provide us with a strong bearish signal. So this could be provided with 3 to 4 4-hour candles that lead to the formation of a slight pullback, and then the fourth candle could lead to the formation of the bearish signal that we would need. So we're talking about approximately 4 to 5 bearish, 4 to 5 4-hour candles. So we're talking about between maybe up to 16 hours to 20 hours that the market would need to provide us with that signal to take advantage of this movement. So in summary, these setups, I think these are the ones that stand out in terms of a trading opportunity based on the trading methodology that I use to provide us with potential trading opportunities within the next 12 to 24 hours and maybe 36 hours. So essentially what is taking place is that the market has either formed or is forming a consolidation setup on these currency pairs, and they have all provided us with strong or clear daily chart signals indicating the start of the movement in all three cases to start a bearish movement that could potentially provide us with a trading opportunity. To take advantage of these expected movements, what is going to be done is to wait until the 4-hour charts provide us with an entry setup, following a brief pullback that is followed by a strong bearish signal. And once that setup and the signals are strong enough, then we're going to be choosing the first one that is strong and clear, and that could provide us with a trading opportunity to capture between 50 and 70 pips and maybe up to 100 pips. So these signals could be provided within the next 12 to 16 hours, maybe up to 24 or 36 hours, depending on how much liquidity is left in the market, especially since we're now at the end of the trading week. So maybe a signal could be given by close to the end of the trading day on Friday, or we could actually see the signal given between Sunday and the Monday of next week. Of course, everything is done within the context of this trading methodology, where the heart of the methodology is to target a trading gain of between 50 and 70 pips based on the signals provided by the daily chart and the 4-hour chart, and aiming to capture this trading gain within 24 hours. In some cases, where justified, the trade can be extended to capture a trading gain of up to 100 pips, and the trading holding period can be extended to 2 days. So depending on the currency pair and the expected movement, this 50 to 70 pip trading gain can be extended to capture trading gains of up to 100 pips. Of course, everything is done mainly by identifying the market direction using the daily chart and the 4-hour chart. Once that is given, once that is established, then we will go on the 4-hour chart to look for a trading opportunity to take advantage of the expected movement. Stop loss would be placed at a strong area on the 4-hour chart. However, if this is too far and will require too large of a stop loss, then we will go down to the 1-hour chart to look for a strong stop loss area. So either the 4-hour chart or the 1-hour chart would be used to protect our trade as we head towards our 50 to 70 pip or up to 100 pip trading target. So that's it in terms of these three currency pairs that I think would provide us with a trading opportunity very soon. So we're going to be waiting until the market provides us with these expected pullbacks and these signals, and trade and take advantage of the first one that is provided by the market. So of course, if you have any questions, you can let me know by hitting that reply button if you're an existing subscriber, you just hit that reply button. If you're a new subscriber, you can email me at shepherdduane@gmail.com. And of course, you can hit me up on Twitter or Facebook, Worldwide 876, or Facebook at Drfx Trading. So of course, if you're a subscriber, then once I see a signal, once I see a setup, then I will send you an email specifying the setup that has been identified and the specifics in terms of the stop loss, entry price, and the target to take advantage of the setup identified. So see you in a few hours once I see a setup that could provide us with a strong trading opportunity.